Good afternoon and welcome to the JOURNEO PLC full-year results investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged to be submitted at any time using the Q&A tab, just situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Russ Singleton, CEO. Good afternoon.
Thank you, Paul. Good afternoon, everyone. Many thanks for making time to hear our FY23 results presentation. I'm Russ. I'm the Chief Exec. I'm an engineer with a background in building technology services businesses. My colleague over to my right is Nick Lowe. He's our Chief Financial Officer. Been with the company since 2017, so we've been here quite a while, and it's taken us quite a while to get the business, the technology and the platform into the shape that we want, but it's really gaining momentum now. The exec summary really of this short deck that we're going to show you today really just is intended to give you a snapshot of where JOURNEO are in its development. We haven't finished our growth phase yet, so we're investing in a lot of new technology and new systems. But JOURNEO is about information systems, managing the very large data sets that are involved in public transport and providing the physical services to buses, coaches, trains, trams, and the deployment of those in around towns and cities and at airports. We're actually really pleased, as we put in the stock exchange announcement, with what we achieved last year. The results are in line with the expectations. We delivered strong organic growth, about 20%, and we completed 2 acquisitions in the year, one in January and one in September. And they've added depth and breadth to our product offering and also strengthened our position in some new markets, particularly in continental Europe. We're supplying software, hardware and services to now the domestic and international markets. And as we said, it's got some real momentum behind it. The group is growing, we're profitable and we're cash generative. And so the highlights are that the revenue more than doubled from 21 million to 46 million. The gross profit increased from 7.8 to 14.3. The adjusted profit before tax increased 4 times, and we have a sales pipeline on our CRM system now of qualified opportunities of over 60 million. If there's anybody here that's not familiar with the business, I've just prepared a slide here to give an at-a-glance introduction to what we're about. So it's about innovation and technology that's applied to real customer problems. And we have a suite of hardware and software, real-time information systems, passenger counting systems, telematics. Most of them are agnostic, so we can connect to whatever technology already exists. And we do that in such a way that it can allow our operator customers to reduce the number of discrete services that they have to buy. We can aggregate them. And our technology and our products then go out to the end user customers through our operating companies at the moment, which we have 4. Our fleet systems business, which is essentially about an integrated services model, where we design and deliver the safety critical systems, passenger counting, CCTV, I just mentioned, into the bus and rail market. And our passenger systems businesses are really about the management and delivery of travel information to the members of the public in street through displays in universities, shopping centres, bus interchanges and bus shelters. And then we have Infotech. It's a business that we acquired in January last year, which is the UK market leading manufacturer of rail passenger information systems. And MultiQ is a business based in Aarhus, northern Denmark, which we acquired in September, which is essentially a software business providing fleet management and infotainment systems with some hardware layering around that. And so the essence of what we do is we develop solutions using ideally best of breed components to build the solution. Where we can't buy the right sort of building components, we'll design and manufacture it ourselves. And we do that from an open standards point of view and an agnostic point of view. So whatever the legacy applications are, we can integrate them along with the obviously latest technologies. We're doing this for a really growing list of superb sort of customers, all the customers that you would kind of expect at a business like ours. So we have bus operators like Abellio and First Bus, some city centre applications, the whole of Edinburgh and large parts of the East Midlands. And we have some international or multinational businesses such as Keolis, National Express, Transdev, where we're providing systems on board the buses, but also at the airports on the interterminal passenger and crew transfers, and also between the car parks and the terminals. We've got now 15,000 assets connected to our cloud platform. It's roughly 12,000 buses, coaches and trains, and just over 3,000 displays are now connected to the platform. They were previously on our EPI product. About 30% of the buses in the UK now are connected to our cloud application. And there's just under 200 of us in the company. And what we're trying to do, as I've said, is we're trying to bring open platform approach and open standards approach to this market to unlock it from sort of proprietary locking, which has been the case for many years up until this point. So I think I'll hand over now to Nick to talk through the financial results.
Okay, so as Russ mentioned, revenue was up 118% year on year, very strong performance. 20% was on an organic basis and 98% was through the acquisitions we made in the year. Gross profit, again, very good increase, up by 84%. Organically, it was lower, so the organic uplift was 2%. So we had several factors impacted margins during the year, not one factor. They all cleaned out by the end of the year, so we actually did enter, we closed the year with much better margins, and we've carried that on into this year. So it was a mixture of some hardware installs where we gain benefit in the future through recurring revenue, some small supply chain factors, but again, they all sort themselves out. So although we only had 2% uplift organically, it's very different as we've moved into this year. Flow to the bottom line was very good. Adjusted PBT was more than 4 times up at £4 million, and our EPS almost doubled to 17.96p. Cash very strong, 8.1 million at the end of the year. We are cash generative. Not all, but most profit is now turning into cash as we sit here today. So we see the cash balance growing as we move forward. And we always talk about R&D. So we spent £1.5 million on R&D during the year. That all passed through the P&L. So the profit numbers above at 4 million are all after the 1.5 million has gone through the P&L. Into the operating companies. So if we start with the bar charts at the bottom, Fleet had a very, very strong performance on revenue. It was up 31% after we had a similar increase the year before as well. Margins were down by a few points in Fleet. As I said before, that has all righted itself by the end of the year, and we're back to where margins should be and where we expect them to be as we are now. Passenger Systems, good uplift at 5%. We received a lot of orders later in the year, particularly the second one on the left-hand side. So we have entered this year with a very, very strong order book to pass through P&L this year. Margins were small, had a small decrease, but nothing significant there. That's just timing. So no margin pressure within Passenger. And on the right-hand side, you can see the blue bar is the addition that the acquisitions brought to the revenue of the group in the year. The vast majority is Infotec. We had Infotec for the full year, and we had 3 months of MultiQ towards the end. Not on this page, but our recurring revenue was just over 10% of the whole in 2023. Our ARR entering 2024 is strong. It's around £7.5 million, and we see around half of that recurring revenue is of the software and SaaS nature. To the top left of the graph, we have various contract wins. These show good spread of the different elements of the business. So Transport for Wales and Cardiff is predominantly software, some hardware, but shows the strength we have there. Hearts and Northern Transport Partnership is predominantly hardware through our passenger business, but with a 5-year tail on it. The Ariva framework is a framework renewal. We've had the Ariva framework for a long time, and that's an extension to that, and that's what we expect to generate it in a year through that contract. Network Rail Northern Trains Cross Country show our rail capability. So we have capability within Infotec and within the existing or the original Fleet Systems business. So we had some strong wins there. The bottom two, Gatwick and East Midlands airports, are two opposite ends of our airport offering. So Gatwick was our first airport, and they renewed the contract by a further 5 years. So that's a 5-year software renewal. And East Midlands Airport became our 6th airport during the year. Operationally, we've already mentioned the acquisitions and the R&D. The third point, we spent just over 400,000 to increase capacity, our manufacturing production capacity. We have a future benefit for that as we can pass more group production manufacturing through that facility. So we will see the benefit of that again moving forward in margin gains. And we also retained all our ISO and certifications.
Thanks, Nick. So this next slide really is a slide that we've been using for a year or so, and it's why we're here, why we are personally investing in this business, and why we are very excited by the opportunities that we're creating, or the ones that are unfolding in the market. And it's against this kind of background theme of smarter cities and interconnected cities, and sort of bringing that into something that's tangible in the shorter term with these mega trends, which there's obviously a number of these, but rapid urbanization, where people are increasingly moving into towns and cities, and we're seeing the move to try and decarbonize public transport as one of the ways that society can meet these goals of sort of trying to manage the climate change. And we're seeing obviously shifts in economic power and demographic changes. And this is driving some incredible technological breakthroughs. And we're seeing this with some of the hydrogen fuel cell technologies, and also these solid state aluminium batteries, which are going to sort of revolutionize the sort of zero emission electric vehicles. And the sort of public transport in many sort of advanced cities around the world is not being a really great place to be. It's tended to be legacy infrastructure, it's not tended to be generating very high margins. And the result of that, the individual suppliers within that supply chain haven't been in a position to move from hydrocarbon-based transport to zero emission. And there's been a number of initiatives to try and encourage this that haven't worked, but the sort of most recent one was when the current government pledged 1.4 billion in this bus service improvement plan to kickstart the transition from diesel-based engines, to carbon zero engines, and that's started. But the real stimuli is just coming through now through something called the CRSTS, which stands for City Regional Sustainable Transport Settlements. And that's 5.7 billion that's been allocated to local authorities to sort of encourage the use of clean energy public transport. And this really, really is at the heart of what Journeo have been doing, because we've been acquiring market share in the public transport sector in terms of the on-vehicle side through our fleet business, but also in our passenger infrastructure business. We've been actively working with the 60 or 70 local authorities or combined authorities, helping them prepare their bids in order to benefit from the BSIP, Zebra and CRSTS funding. And it's just starting to work. So, and then the sort of final point about this, and this is obviously some of these are UK, but some of them are not UK, they're outside the UK. We're seeing that the rail control period is about to start. So the rail business works in a 5-year cycle, which they call control periods. We're right at the very end of CP6, and control periods 7 starts in April. So our strategy really from Journeo has been to apply technology, not just for technology's sake, but to actually to improve the economics of our fleet operator customers by agnostic approach and open standards, and then try and do the same in the passenger infrastructure as local authorities and towns and cities prepare themselves for autonomous vehicles, where you need much higher speed, sort of low latency 5G communication to all of the infrastructure. We effectively launched Journeo as a brand right at the end of 2019. So effectively in 2020, that was when our first cloud application came to market. And I won't go through each of these sort of years, but our revenue, can you see, has organically gone from 11.4 to 12.6 to 15.6 to 21.1. And that 21.1 increased organically by 20%. And then overlaid on there, as Nick was saying, the acquisitions of Infotech and MultiQ. And we really are building now a very, very strong pipeline, both in terms of our recurring revenue or contracted SaaS revenue, and also future opportunities spread over a wider catchment of customers. So it's no longer bus, no longer coach or rail, it's got airport systems in them. And it's also now sort of moving into highways, parking applications, and traffic light priority sort of applications. So we can see more potential in front of us now as a result of the position that we've created. So sort of this slide really is to update. Again, it's a slide that we've used before, but why we think that this is an exciting place to be. We're trying to get to revenues of about 100 million now. We believe double-digit operating margins are deliverable, particularly as the business mix evolves from being essentially installation and service of other people's technology to integration of other people's technology to sort of enterprise-wide applications of our entire solution, which we're seeing in a number of cases. So our organic growth strategy is to increase our share. That's both through obviously increasing our share of the existing market and capturing share of the growing market. And we intend to do that through a mixture of sales and marketing applications and sort of vertical marketing within quite a large customer base. We do intend to continue to add strategic acquisitions or consolidation to further provide depth and breadth to our offering. And our ambition really, from the acquisition point of view, is to acquire service businesses as a line of sight to their customers, where these businesses have domain expertise which we don't have, but we have the technology and the service capability to assimilate them into the Journeo offering. As Nick said, our annual recurring revenue is growing. In the current year, we expect it to be at least 7.5 million. And about half of that now is going to be software, obviously, and that will alter our margins, net operating margins. And what we're doing with this is we're creating a scalable and resilient business with much better visibility of earnings. And the SaaS is critical to that. And it's not just software as a service revenues. We also benefit from other sort of software revenue, which is actually embedded in some of our hardware applications. And then we intend to take this into adjacent markets. There's a number of opportunities, both in the UK and outside the UK, where we can see from conversations we've been having or some joint bidding that we've been working on, that it would be in our interests for some of these businesses to actually sit within the Journeo envelope rather than be sort of white label or licensees of our technology. So that's sort of our strategy. Our strategy hasn't changed, and we can see in front of us how we can get to this 100 million revenue mark, and we're determined to do that. So the last slide really is just a summary. It's to open the floor to any questions that you might have, and just to summarise that we're very pleased with the progress that we're making. So.
Fantastic. Thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions just using the Q&A tab situated in the top right-hand corner of the screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation along with a copy of the slides and the published Q&A can be accessed via your investor dashboard.
We lost all the ones that were above?
No.
Okay. Right.
Unfortunately, you've got quite a few questions there, Russ. So that's why you can scroll. So look, thank you to all the investors for submitting those. And on that basis, if I may, just ask you to just click on that Q&A tab, and where appropriate to do so, just read out the questions and give your response. Thank you.
Okay. There's such a lot of them. Can we scroll to the top of them?
Yep.
Okay, just bear with us a second. We're just trying to get to the top. Okay. So should we talk about there was one on the M&A. Which one? Where's that one gone? I think it was. Gosh, there's so many of them. Okay, we'll talk about this one. Okay, so can we talk about the M&A landscape and how many other interesting potential acquisitions are out there? So at the moment we have we're targeting a number of or tracking a number of interesting businesses. I would say there's probably 10 or so that we've got dialogue going with, and maybe half a dozen at various stages in the process. Most of them are in the UK, although 2 of them are outside the UK. If we're able to, obviously you can never be sure with M&A work, but if we're able to, we would look to do at least one of them or possibly 2 of them this calendar year. And they are literally a route to market for our core technology. So no diversification. So I'm not sure if that answers. You want to scroll down to?
Yeah, let's try.
Yeah, do you want to take that one?
Okay. It's a nice balance sheet once I have it. Please explain the increase in provisions in non-current and current liabilities. Predominantly, it's warranty provision. We've had no change in our policy. Most of it has come through the acquisitions. So we have. I'd say we have a very sensible warranty provision, as did the companies that we acquired. So we've made no change to policy during the year. It's predominantly say what's come with acquisitions.
So the next question is: to what extent are we in a virtuous cycle where new contract wins are proof points to win further contracts with customers? Obviously, you've got to be careful we don't appear arrogant here. So we don't take these situations for granted because we're still in what we describe as an entrepreneurial phase of the business. But it's really encouraging when customers come to us because they've had a reference from an existing customer. We've recently just been through the Net Promoter Score process, which obviously it's an ongoing process. That was quite positive. Most of our airport sales have actually come through that route. So we initially designed a system for Gatwick, and they then started to promote that within their airport group, and that then led to a number of airports coming to see that system, and that led to the sale of the system at Stansted. They then did the same, and that subsequently led to Heathrow, which is our largest airport to date, generating probably somewhere in the region of about 4 million to us. And as Nick said, we've now got 6 airports, and they all seem to come that way. There's a fairly long sales cycle, but we do anticipate another this calendar year. And it's probably as much as we can say about that. We don't take anything for granted, and we're delighted when customers do refer us. Okay,
I'll take this one.
Take that one. Yeah.
So there's a question about receivables. Receivables seem high at 12.2 million. I guess on first look, yes, they do. If you strip out some of the contents of that, so there's just over £2 million. It relates to construction contracts accounting. So on the passenger side of the business, we account using construction contract basing. So that's a balance sheet movement rather than actually a physical trade receivable. So it's 2 million movement in and out. So our true trade debtors was actually about 9 million. You strip the VAT out of that, you're at about 7.5 million. And we had a decent run rate at the end of the year. So it's equivalent to only just over 45 days. So nothing usual, just supports a strong run rate at the end of the year.
Okay. The question here, I don't know if there's anything above that. It says double-digit operating margin is quite a broad target. Might you be able to get to 20%, for example? Leading SaaS businesses get to 25 to 30%, though he appreciates that we're not pure SaaS. Well, it's a really good question. At the moment, we don't think we can get to 20%, but we think we could. Obviously, this year we generated 20% organic growth, and you can see with the Infotech business that's got quite a high ROS. So because we're building out the entire solution, we actually want the entire solution. So we are selling now some software applications where the gross margin is very high because there's minimal cost of sale. But we don't break that out. So there will be a pure SaaS or software component within that sale, but there also maybe then some integrated services and possibly some civil engineering or communication or subcontract. So it's difficult with the top line growing so strongly for us to deliver a 20% net ROS. But we are pretty confident that we can deliver double-digit growth, and it's possible within the segments of the business that we will be better than that. Not all the segments have got the same sort of operating margin potential. So I hope that's answered that question. Okay.
I'll say the bottom one. How much of the cash is related to customer payments up front? So we've previously highlighted that we had a large upfront payment on one of the contracts that came with Infotech. That's predominantly washed out now. There's very little of it left, and most of it is, it has gone. Our cash profile on certain contracts, mainly in passenger systems, does have an upfront element. So a proportion of the whole contract is paid up front, but that very quickly washes out in 2 or 3 months. So out of our total cash balance of 8 million, as a whole, probably just over a quarter is payments up front. But I say it cycles depending on times of year. It's likely to increase actually now because local authorities often pay more cash out at the end of their years. But yeah, vast majority of the cash is not upfront payments and is our cash.
Okay. Can you just scroll up? There's one there, just that one. I can't see the front of the question. Okay. So Oxford University report is out this morning highlighting 3 key drivers for dementia, and second on the list is traffic pollution. Does any of our technology record pollution? Yes, it does. We've got a pollution sensor module, which is initially we started off with a full gas sensor where we're looking for the nitrous oxides and the carbon monoxide. But we figured that after carrying out some tests with the local authority customers, what they really were interested in was diesel particulates. So we actually have a trial in West Midlands where we've got around a dozen of our new particulate sensors being networked, and we're producing a heat map where you can see the particulates density changing over time. And what we're working on now is whether it's possible to feed that into their into the app that people use, when they're looking at the bus departure times, to have like a differential between going to a particular bus stop versus another bus stop, which has actually got lower particulates in. So it's actually something that we've used with a minimal infrastructure. So it literally just requires a local power, which we can pick up from our displays. So at the moment it's in beta. It absolutely works, and it's very accurate. But what we're not sure about is actually who will pay for this. Is it something that a local authority would pay for, or is it something actually that maybe that the transport operators may pay for? So it's a very interesting area, and there's going to be a lot more focus on this. And then also the road tyre wear, that's now starting to become an issue in the waterways, particularly at the sides of motorways and busy trunk roads. So I think it's a watch this space kind of issue. That okay.
Pick that up.
Yeah, pick that up.
Yep. So question on the 60 million pipeline, how is this phased over the next 2 years? So to be qualified in our pipeline, we have to view it as a strong opportunity where it's fully qualified. So we either know the customer or know the potential customer very well. It would, I guess, we would expect to probably win that over the next couple of years, although more will go on the pipeline in that time. The phasing of the revenue when it lands again could be depending what segment of the business sits. Some may be immediate P&L, some may be spread over 2 years, some may be spread over 5 years. So I think it's fair to say we expect to win the majority of what's on the pipeline, but that's not in the next 3 months, 6 months. It could be up to 2 years.
Scroll see any more.
Yep. I think it was top one. That one.
Okay. Can we talk more about the latest purchase orders for cameras to replace mirrors to enhance safety? How big is this opportunity for us? Okay, so in the UK, if you just talk about the UK market, there's 35 to 40,000 buses, that sort of magnitude. And buses and coaches and heavy goods vehicles, by law, have external wing mirrors. It's a mandatory requirement. They have them, and they're quite big, and they do damage buildings and other vehicles, and very sadly, occasionally people. And a number of countries have been looking at how they could reduce these accidents, and the UK is one of them. And Transport for London have this Vision Zero policy where they actually want to have no fatalities on the road as a result of TfL activities. And one of the things that they focused on was digital wing mirrors to replace the high profile physical mirrors. So we have a product which has been through the vehicle testing agency. It's homologated. It took us about 3 years to get that homologation, and we've been installing it initially on new buses, but we've recently had it passed by the Vehicle Standards Agency and also the trade unions for it to be retrofitted. So the two announcements that we made, one on the 11th of March and one the other day, they are for vehicles inside London. And inside London, there's about 9,000 buses, and around 1,000 of what were known as Boris buses or the new Route Masters. And we've recently secured orders for about, I think it's just over 440, that sort of number of them, and we are expecting more.
So, yeah. Can you give us a view on the different gross margins of your product offering, and how the mix will change over the long term? So on hardware, depending on which part of the business we are and a certain contract, we would expect to get late 30s. It can range between 30 and 40% for hardware. Services, we would hope to be north of that, I guess, in your 40 to 50 territory. And then software, the target is to get that much higher, your 60, 70, 80%. We need the economy of scale to get that. So we're moving there. So we're not there yet, but we're heading in the right direction. So I guess that leads to the second part: how will the mix change over the long term? I think we would expect the margins to increase as we have a greater element of recurring revenue and more economy of scale on that revenue as well.
Okay. Obviously, some. Oh, sorry, I thought you were going to take the one above. Okay, this obviously is a bit of a delicate question. What gaps do you see in your current product services offering that you can enhance with an acquisition? And you ask because the last acquisition was exceptionally well structured. Obviously, thank you for that. Could this happen again? We would hope so. And some of the characteristics that we have internally, our sort of metrics for acquisition, we apply. So if it doesn't fit that, we don't do it. And we have a number of them that potentially would fit that. And the gaps in the market really are, if you're going back to that slide about the mega trends, that the sort of public transport and passenger transport market hasn't converged like many other industries have. There's been sort of lots of disparate systems, and we believe it's inevitable that they're going to connect together. And in fact, there's some new technology coming that's driving that. And we can see there's opportunities then, sort of little vertical markets within that overall envelope that we don't currently have. And so it's that sort of thing. I don't think it'd be appropriate for me to sort of mention them specifically. But as we make these acquisitions, you'll see how they sort of fit together, jigsaw style. Okay. So which ones haven't we covered? Any more coming in? You want to talk about that one? Perhaps can we give a sense of confidence about how much of the FY24 have we already effectively got concluded? You want to perhaps tackle that one?
Yep. Yeah, can you give us a sense of the level of confidence you have in the business at the moment? So yeah, so for 24, we're confident.
Yeah.
We have a good proportion in the order book for a mixture of the newer system sales and the recurring. We always have more to win, but we have the comfort of framework agreements with operators where we may not have a PO yet, but we know, or we believe POs are highly likely to land. So yeah, we are confident sitting here about the numbers.
And how is your expansion going into mainland Europe? So we haven't sort of featured this, but we've had a JOURNEO Stockholm business for 10 years now. And we have a team of 5 engineers supporting the PTOs in and around Stockholm. And in September last year, we acquired MultiQ, based in Aarhus, Denmark. And our intention is to bring those together, form JOURNEO, initially JOURNEO Scandinavia, but ultimately that will be the hub for JOURNEO Europe. And at the moment, we're going through the certification of Infotech product so that they can be sold into Germany, France, Sweden, Denmark, Iceland, Norway, the whole sort of, and Italy, and that sort of region through the JOURNEO Europe business. So we're expecting a lot of growth to come from that over the years as we enable our products and software to be sold into continental European markets. Okay, that's the next one.
Touch on
yeah, do you want to do that one?
Yeah, so just a question about, can we add a bit more colour to the operational cash flow? That may look quite low. So we have good cash conversion rate. I would say we've put majority of what we need to into working capital now. In terms of turning that to cash, with, as I say, with one particular large contract that came with Infotech, we did already have half of the cash because of an upfront payment. So that would impact what's seen as cash generation during the year. But that's washed now. So say we see this year as not to the pound, but profit should turn well into cash this year.
Any more down at the bottom?
No.
What's that one about potholes?
Well,
There you go. Oh, right, here, potholes are a major issue, and JOURNEO are in a great position to provide data with buses on most roads. How about a pothole app created by JOURNEO and welcomed by all road users? That's a perfect question. Whether David actually is our customer. We actually have a trial of this at the moment. So we thought, like you possibly do, that a bus would be a great thing to tell you about potholes. But so did we, and we have accelerometers on all of the buses that should be able to tell us about the impact. But what people tend to do is if they see the pothole, they tend to try and avoid it, particularly other road users. So what we did is we mounted a LiDAR on the front of a test vehicle and started scanning the road ahead and building up quite a sort of good meteorological database where we knew the GPS location and we could measure the pothole's diameter and its average depth to quite a degree of accuracy. But we realized that we can't use G-force sensor on its own to do that because a lot of drivers actively avoid the pothole, so you don't see it. And so at the moment we have a research program going on where we're fusing video image with LiDAR information, so that along with the accelerometer, so we can actually pinpoint the pothole, and also, we can trace whether it was repaired within the SLA of the road contract to the Highways Authority. So it's one of about half a dozen development things that we have, which are pre-revenue from JOURNEO's point of view. I hope that answers your question.
Yeah, good.
Yeah, just have a look. Yeah, I think we've answered most of them there. Yep. So I think it's back to you, Paul.
Fantastic. Thank you very much indeed. And thanks for covering off so many questions you've had through. Obviously, you will have the opportunity to review any further questions that come through, and we'll publish the response where appropriate to do so on the Investor Meet Company platform. Look, before redirecting investors to provide you with their feedback, I know it's particularly important to you. Russ, could I just ask you just for a few closing comments, if I may?
Okay. Really, obviously, again, thank you very much for making time to hear our story. The takeaway message is that we're doing what we set out to do. We're a solutions business. We believe that's our strength in the market. We're not just about products. We're not just about software. It's about the whole solution. We want the solution. We want the enduring relationship with the customer that builds a great degree of trust. We call that bonding, and that's something that we're very keen on. And we are profitable, we're growing, and we have a great pipeline of opportunity and an exciting kind of vista opening up in front of us. So thank you once again for your interest.
Fantastic. Russ, Nick, thanks indeed for updating investors today. Can I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order management can better understand your views and expectations. This will take only a few moments to complete and is greatly valued by the company. On behalf of the management team of JOURNEO PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.